UMC just printed that 8.74% rocket, and Dayrade Nation is losing its mind. Welcome to Dayrade Daily, where we squeeze intraday edge out of chaos before chaos squeezes you. Smash like and subscribe, or this candle claims your risk management card on stream.
UMC at 8.83 is sprinting like my heart rate. I blink and it is another staircase higher. This is pure opening drive gamer mode, not gentle grandma swing trade energy.
Relax, turbo hamster. UMC is popping because Semi's got that global capacity narrative again, after those foundry headlines. For day traders, it is a clean gap with volume, not a spiritual awakening.
Structurally, UMC is a classic mid-cap chip squeeze. Risk desks hate being underweight when the cycle turns, so you get this forced buying into strength. For intraday, think breakout pullbacks, not blind top-ticking heroics.
And remember, degenerates, it is Wednesday, January 7, 2026. Tape is bullish. Average intraday volatility near 4.81%. This is where my people either level up or write sad journals. So like and subscribe before you become cautionary law.
Speaking of journals, mine just screams INTC, INTC, INTC. Intel at 43.12 with that 7.70% turbo is like grandpa discovering pre-market and going full meme trader overnight.
Intel woke up because the street finally believed that data center guidance. Upgrade notes, buyback whispers. Everyone panic buying the boomer chip. For us, it is textbook opening range breakout. Then stalk that first nasty pullback.
This is not boomer. This is the INTC redemption arc, my people. If it reclaims the opening range high with real volume again, I am calling it the Silicon Rapture, and I want full cult credit for the prophecy.
Just remember, Intel spreads can widen in the first minutes if your first fill makes you say, wow, that was expensive. Your size or timing is wrong, not the broker. So refine the playbook, not the conspiracy theory.
Okay, but DDOG at 145.04, up 5.79% is literally chasing my stop. I move it one tick and the candle teleports there like it is personally offended by my risk settings.
Datadog is ripping because usage metrics surprised, and every growth fund remembered they love observability again. For hyperclickers, that means trend day candidate. Buy structured dips, not every random pixel of red on the chart.
DDOG plus CRWD plus PANW, all green, is Cybersecurity Avengers, assembling. CRWD up 5.68% and PANW up 4.84% is option premium, singing hallelujah for the degens.
That cyber basket is basically a volatility amplifier. On a bullish day, dip buyers treat every tiny pullback as a discount, so fading strength becomes dangerous, especially midday when volume tapers and liquidity gets patchy.
Translation for fellow goblins. If CRWD just gave you a 5-candle elevator higher, maybe do not short the next one, unless you collect instant regret like it is loyalty points.
Coming from the guy whose P&L looks like a heart monitor. But yes, fading strong cyber trends on a green tape is how accounts go from trader to educational slide deck.
Speaking of redemption arcs, NOK at 6.86 up 6.11% is the meme uncle who actually did cardio. Radio nerds everywhere are chanting for this breakout like it is the ringtone renaissance.
Nokia is finally getting love because carriers hinted at fresher spending trends, plus chatter about network upgrades in emerging markets. Intraday, it is more grindy trend follow than hyper-growth slingshot, so scale in instead of chasing spikes.
Grindy trend follow. Sounds like my dating life. Tiny moves, way too much effort, and at the end, I am somehow still bag holding. Emotional damage.
You are not bag holding. You are just emotionally over-leveraged. Risk tip. If your relationship stories sound like your trade journal, either fix your size or your taste. Preferably both.
Quick community thing, my people. If this chaos helps you survive this bullish tape, tap like and subscribe. It fuels jet panic scalps and keeps Grizz from vanishing to that mythical cabin in the woods.
Zooming back to basics, average intraday volatility around 4.81% means today is bigger than your usual practice range. Your position sizing should shrink as volatility expands, not stay stubborn and static.
Non-PhD version. If the candles look like boss fights, use baby size. If your chair slides back when the trade moves, congratulations, you YOLO'd way too hard.
That is actually decent wisdom from the latency goblin. Another rule. Do not chase first green after a 5-candle vertical push on names like UMC or INTC. Let one consolidation form, or you are volunteering as liquidity.
Conspiracy interlude, my people. UMC, INTC, DDOG, CRWD, all ripping together on this Wednesday, January 7, 2026 tape. That is the hidden factor model called Funds Forgot to Hedge Their Tech Basket Again.
Or it is just risk-on beta rotation after that macro print, plus social sentiment rotating back into big liquid names instead of sketchy options chains that implode on contact.
Let Toro have this one. Last time I fought this conspiracy, we ended with moonphase fib levels, and Chad actually backtested it, and somehow it beat half my serious setups.
Honestly, moonphase fibs probably beat half the backtests out there. But serious note, social sentiment is loud on semis today. Threads are canonizing UMC as the chosen one. That is usually late money, not early smart money.
Exactly. You buy the panic pullback, not the sermon candle, my people. First proper dip toward VWAP on these moonshots is where legends are born. Or where tight stops keep you humble and solvent.
Before we fully derail into astrology, quick shout to CELH at 51.24, up 5.24%, basically fueling half this community. Intraday, it trades like pure momentum energy drink in chart form.
Celsius is bouncing as wholesalers reported stronger fridge turnover. Plus, those influencer campaigns did not flop. Liquidity is solid, so treat it as a momentum scalper playground. But watch for midday volume cliffs.
The irony of an over-caffeinated crowd trading an energy drink stock trading tip, wrapped in dad joke. If your caffeine grams exceed your risk percent per trade, you are doing both your heart and account dirty.
All right, lightning round, my people. Bold prediction. UMC keeps the hype, and some subreddit declares it the official semiconductor mascot by Friday, complete with cursed fan art and terrible option flows.
Lightning call on INTC. If it holds that 7.70% style ramp, some long-only fund manager will start a podcast about how they always believed while we watch their panic buys on tape.
My DDOG prediction. If this trend continues, some engineer tweets a meme dashboard, and the stock gaps another 3.00%. Apparently memes qualify as soft guidance now.
Serious angle, CRWD and PANW probably chop sideways while options cool. But one surprise headline and they halt, because nobody hedged intraday. Treat those as loaded spring names, not sleepy afterthoughts.
Wildcard. CELH either trends another 4.00% and chat blames us, or it mean reverts and we pretend we never mentioned it. Screenshots. Or it did not happen. Co-post not accepted.
Nokia prophecy time. If NOK closes strong, I expect the Boomers Only Discord to declare a new golden age of ringtone stocks, and I absolutely want spiritual front row seats.
Big picture. This bullish tape will trick people into thinking 4.81% days are normal. Then first real red day hits, and half of FinTwit mysteriously discovers mindfulness retreats and digital detox.
Practical finale from the boring guy. Pick one or two names like UMC or INTC to specialize in today instead of spraying 10 tickers. Depth beats distraction, especially on higher volatility sessions like this.
And with that, Dayrade Daily is out. Hit like, subscribe, manage your size, respect your stops, and we will see you degenerates on the next session of Beautiful Nonsense, and hopefully not catastrophic P&L. Click the buttons or the market humbles you for content.